Avid investors, thank you so much for packing the house to hear Bodie Jones talk about his experiences in the real estate world as a budding private lender, and then to hear Owen, Scott, and Deidre from Title I really bring it home with the process of private lending and owner carries and what happens when we get into these creative financing and how to deal with it if a deal goes sideways. What I heard today was with private lending, terms are clutch. First lien position, having a short-term, non-owner occupied and a well-vetted borrower and a well-vetted property. Thank you, Chuck Darby, is all key. And the advantages of doing this is there's no toilets to fix, no maintenance. It's tangible. You can drive by it and you can set your own terms. But it requires cash to lend, and this can be gotten from your bank account, from equity, from a HELOC. And it requires some tax planning to make sure that it's worth it. Other creative financing options are like a lease option, owner financing, or selling to your tenants. And you can charge points and you can make interest in lieu of cash flow and other advantages that real estate investing brings us. When you do all this, it's very crucial to have a neutral third party, and that's what Title I is, who has the documents that we need that are, unless you're going to get it all convoluted and you're going to want an attorney for that. Obviously, these guys are not attorneys, as they've reminded us, but they've got some really solid documents that let you fill in the blanks on the interest rate and the terms of a deal. They take and track payments, and they can charge the lates, collect and disperse payments for a really reasonable fee, which takes a lot of pressure off of you as the private lender. And at the end and the payoff of the loan, they'll issue a deed of reconveyance. When it goes sideways and the stories start getting made, there's a notice of default filed, and there's a 115-day period after that, and a whole bunch of time and hassle if payments aren't made, typically for lack of payment of otherwise insurance and maintenance. But selling the property and just paying off the note is a common cure before you get all the way to the auction process. If you do get to auction, there's a starting bid, and if it's occupied and there's an owner in there, you may need to do an eviction, which is going to be hectic. But at that point, the lender gets their money back if the bid is at least enough to make them whole. Otherwise, that's when they get their property back. So there's a lot to it, but you have a lot of options for creativity if you've got a little equity and a little cash and you're sick of plunging toilets in the middle of the night. There's creative lenders in the room, and there's an amazing team behind us at Title I. Avid investors, take advantage of your team. Thank you so much.